Welcome to the Real Money Show, the number 18778 silver and the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And what a week in precious metals. Jerry, how did we end up doing so far? I mean, it's still a couple hours till close, but crazy.
The momentum is not stopping in precious metals. The momentum is starkly higher with every resource. Every commodity is up. Massive days this week for gold. We broke all-time highs a few times this week. So it's a very exciting week. And obviously on the back of a lot of central bank uncertainty. When will they cut interest rates? Is it going to be June? The 11th and 12th is the next FOMC meeting. Is it going to be later on in the year? They're going to push it back. Is it going to be higher for longer? But it was ultimately a very good week for both silver and gold. Silver started the week April 1st, April Fool's Day. $25 we started the week off. We're ending the week at $27.40, a 9% move in 1 week. For gold, we started the week off last week at $2,250 US per ounce, up 3% to settling off at 23.20, 23.30 today. For the year that is so far, silver up higher than gold, which is a very stark contrast from what we're normally used to. Silver up 5.5% on the year so far, and gold up 12.7%. Last year, we had a very good year in gold. Silver was relatively flat. So last year, we had a pretty good year as in gold as well, up 18%. But massive momentum. And this isn't stopping. We have the Fed talk, a lot of jawboning. People are not certain exactly what's going on with the Fed. But then now geopolitical issues supporting the prices. So the momentum is going to continue.
Yeah, I've had a few conversations this week just talking about all-time highs, which I want to address. But to me, it's one of these things where it's not unexpected. It was always going to happen. It happens at a time where you're kind of not expecting it per se. Although that said, there is geopolitical risk on the table. There's issues with the economy that anything can kind of trigger it. But people are looking at gold at quote unquote all-time highs, and they wonder if they should maybe not get involved in the market or if they should be conservative about the market. And we put this out on X this week talking about the fact that the debts have been unprecedented for years. The stock market has been hitting unprecedented highs for years. What did you expect that would happen when you printed all this money and deficit spent all this money? What did you think was going to happen to the price of gold? But here's the problem, Jerry, is people are too consumed by price and not considering the value. Mm-hmm. If you say that if the dollar was worthless, gold would be priceless. If you start with that in mind, then now you have to look at how much is gold worth in weight against certain things. Gold in 1980, $850 an ounce. The Dow Jones fell to 850. That was 1-to-1 ratio. In 2011, the Dow Jones was off the bottom from 6,700, went up to about just under 8. Gold went to 1,900. It was a 4-to-1 ratio. We're still at 17-to-1.
That's right.
It's huge. You're
massive.
saying so much money has gone into the stock market because they had low interest rates and people had to chase yield. Where else were they going to put their money? Mm-hmm. So they chased the stock market. I wonder why the stock market is overvalued. And we're going to talk a little bit about opposite land that we're experiencing. But the idea is, what's the value of it? The value of it, because how many ounces of gold should it take to buy a house? In Toronto right now, it would take you 500 ounces to buy a cookie cutter 2-bedroom, 2-bathroom. In 1980, you could buy a $120,000 house with 150 ounces of gold. That is...
Makes you think again.
Imagine what you were buying in 1980 for that money. Yeah. It wasn't an apartment. So what is the value of gold, not the price? If you're looking for price to indicate something to you, you're not going to get it. So is it at an all-time high? Yeah, get used to it. That number's going to keep going up. It's going to be all-time high. Now, nothing's going up in a straight line, but get used to those get used to the headline, all-time high, all-time high. Now, look behind that and find out, is it undervalued or not? The debt, $34 trillion in the US. They're adding $1 trillion every 100 days. The Fed is losing money. If they were any other business, they'd be bankrupt. It took 100 years to add $1 trillion to the deficit. Now they're doing it every 100 days, plus all of the unfunded liabilities. They've sent so much money abroad, right? And I'm sure people can see that now. And it's so they've brought so much democracy, by the way, to Ukraine that I don't think they've had an election since 2014. They're doing such a great job of bringing democracy. But it is, and speaking of that, it is an election year.
Yeah.
So no wonder we see the seeds of chaos being fomented everywhere.
Yes. Especially with the eclipse coming up next.
Eclipse. There's bird flu, avian flu. Wars have all broken out everywhere.
Measles 2.0.
Measles. Goodness. We're waiting for what will be the new iteration of protesting turned riot. Well, peaceful protests. Who's it going to be this time? Who's it going to be? Because it can't be Black Lives Matter. Like, I'm wondering if it's going to be somehow the LGBTQ community.
It could be.
Like, who's going to get paid to riot this time? Who's going to get paid to foment more chaos in an election year? Because that's what happens. That's what happens every 4 years, and we're seeing that right now.
The trends are clear.
Yeah, so in terms of looking at all-time highs, we want to get away from price. We want to look at value. And if you can understand that, then you will look at the ratios of how many ounces of gold to buy things like stock market, houses, all of these type of gold to debt, etc. And you will see that it's extremely undervalued. Yeah. The central banks keep buying it. So all of these factors alone, you can see gold moving, and all of the prognosticators in the gold market are saying easily 5, 7, maybe even 10,000 over time. Let's see where we end up, but we're into the bull market clearly.
Yeah, when you have Bank of America, when you have many banks revising their gold predictions, where they're going to see it used to be 2,200. Then they're revising up to 23. We hit 23. They're going to revise it to 24. It's going to be, though, the most conservative number, of course. We're going to forecast 2,600. We're going to blow through that, too, like a hot knife through butter, because the momentum is on our side, the momentum for precious metals. And if you think for 1 minute, that the gold and the silver prices this week or the last 2 weeks have left you behind and that the train has left the station, it has not. The silver to gold ratio right now is still hovering at 85 to 1. Anything over 80 is signaling a silver buy. Silver is on sale despite where we're at. Not much. The next resistance level from where we are right now at $27.40 silver, the next resistance is $28.30, another buck higher. But from that point on, it's $30. So be ready. Put your seatbelts on. Silver is a coiled spring. Not much resistance for gold. We're just hitting all-time highs. So it's setting a precedence. Gold will continue to march higher despite the jawboning from the Federal Reserve. That's all they have left in their toolbox of tricks. They've tried the twists. They've tried the QEs. It's over. Now that they have forecasted, okay, there's a potential rate cut in June. Do you, Jeremy, know how large that rate cut will be? I know they have raised interest rates at 1 point here, 75 basis points there, maybe a 50 pointer. And then it was the rest of the rate hikes were all 25 little nibbles. Is it going to be a nibble when they cut, or is it going to be a slash?
You know what? It's a Sophie's choice. You either try to raise interest rates and destroy the economy by suffocating it. When if you have inflation, you need to create more stuff. Inflation is more money chasing the same amount of goods. If you're going to stifle the economy by raising interest rates, then what you're doing is you're preventing more goods from coming to the table. So you're destroying productivity. So you're going to destroy the economy. Now, if the economy gets too bad and you have to lower interest rates, you're abandoning the inflation. Mm-hmm. And, you can see everywhere all of the employees are going to be asking for raises because of inflation. and they're going to get their raises, and then a bunch of people are going to get fired along the way, and
Like
now
UPS.
you're in recession territory. And how are you going to do that? Oh, we're going to lower interest rates. To where? You're just going to let the inflation fly again.
That's right.
So they are in the corner, and there is no way out. And that's why we've always said gold is your protection. It is wealth. It is real money. I loved what Matthew Piepenburg said almost a year ago in an interview. He said it's insurance against dying currencies. And there is no way out. No way out for the Fed. They've printed too much money. We haven't even talked about unfunded liabilities. You have to have a real asset that's going to protect you. And gold has outlasted civilizations. So gold is a great place to be. Silver is even more undervalued. We'll talk about that in the next segment. But if you are looking for ways to insulate yourself against the fragility of the financial system and what could come, don't wait till seeing is believing. Don't wait till silver's at $50. You want to get in way ahead of time. At Guildhall, we handle physical precious metals. If you can't hold it, you don't own it. If you're not owning it directly, all you have is an investment. You have counterparty risk, and that's what you're trying to insure yourself against. You have house insurance, car insurance, life insurance. What about financial insurance? What about market insurance? That's what gold and silver does. That's what we help people do, especially in registered accounts, RSP, TFSA. Lira, Lif, Riff, the number 18778-SILVER, the website guildhallwealth.com.
Remember, if you can't hold it, you don't own it. We offer the most efficient and direct routes into physical markets and precious metals so you can protect your wealth entirely outside of failing currencies and the digital banking system. Now is the time to undigitize your wealth with Guildhall Wealth, guildhallwealth.com or Guildhall Wealth, guildhallpreciousmetals.com, and pick up a tube of maples, silver combos on sale, 100-ounce silver combos. Give us a call. We'd be more than happy to sit down and chat, have a coffee, and help you out.
It's The Real Money Show on 640 Toronto. More to come. Welcome back to The Real Money Show, the number 18778-SILVER, the website guildhallwealth.com. As anyone who's been watching the markets this week, although I doubt the financial news shows have talked about it much, but as the precious metals have been rising, how are the stock markets doing, Jerry? Because you came up with an interesting article talking about withdrawals.
Yeah, we had a lot of data this week pointing to a slide in the U.S. indices, Dow off, plus minus percentages, a few percentage. Healthcare was the weakest sector. Energy was up this week. I think the Canadian gold exports helped the Canadian economy a lot. It's too bad we don't keep some of that gold here in Canada. But the dollar is dipping. But one caveat pertaining to the outflows in the stock market really stuck out. So this was coming from the Bank of America Security, Equity, and Quant strategist Jill Carey Hall. Said last week that there was an outflow out of the S&P 500 index from Bank of America clients, with many losing 0.5%. They were net sellers. These clients were net sellers of U.S. equities and stocks by the amount of $1.9 billion. According to her, inflows we're seeing between ETF and some stocks. There was some inflows, but most of the clients, excluding corporate clients, she's what she said, because obviously we know corporations, what they do is they buy back shares. So this is not natural growth when you have a company just investing in their own stocks. They're ballooning their own stock market for their own gains. But all three client groups, according to her, were net sellers of U.S. equities for a second week in a row. Private clients for the 8th consecutive week, hedge funds for the 4th, and institutional clients for the 2nd. She notes this is a massive drawdown. She's noticing equities are pouring out. Clients, the regular Joes, are not confident any longer with the equity market. Signals that, yes, the ratios are too high. The sales, the sales to book ratio, the earnings ratios, everything was off and skewed, pointing to these overvalued stock markets. So this is some data that we have to take, obviously, with a grain of salt, but we just got to keep mindful and be mindful and understand how and where the money is flowing. And it's definitely not back in the stock market.
Yeah, so you're seeing outflows from the stock market, But at the same time, we're seeing all of this opposing data. I want to get into this because you've brought a couple of different examples of this where the regular Joe on the street who doesn't have access to have $1 million and have inside type of information and really highbrow stuff, where the indicators are all opposite. How is anyone supposed to make proper decisions when the information coming at them is constantly conflicting? What are some of these articles where you clearly see that conflict?
Yeah, it's so difficult to determine where to go when you have conflicting messages from the mainstream professional news, and this is market news. So this was last week. We touched upon it briefly. The headline was "The Case for Investing in Silver Over Gold, but Be Careful." It was a big, you can do it, touch silver, but guys, be careful.
Yeah.
It was information and data coming from Michael Su from Deutsche Bank. He said, you can go into silver. It's a very healthy market, but there's a catch. There's still a vast stock of silver above ground. Too much supply. It's going to have a weight. It's going to have a headwind on precious metals. If there's too much supply and lack of demand, Jerry, the price is going down in silver.
Yeah, and by the way, I'm going to put this guy as like your uncle during COVID who you're arguing with. Believe me, I know everything. There's so much silver above ground. Forget it. You can put your money in there, but I'd be careful.
This is a lot of...
Come on, buddy. Like, what do you know about the market except for the fact that you work at Deutsche Bank?
Except the vast stock of silver above ground in the form of scrap silver that can easily make its way to the market at the right price.
Oh, what is that price?
I'm just thinking,
did he say what that price was?
Where is this above ground? What we do know is year over year, over the last 5+ years, there have been deficits, less and less silver coming out of quality mines, less and less. However, we were seeing more and more demand through the roof.
Exactly, but this is I did a Google search and I came up with this guy and he told me that there's a lot of silver. So why would I put my money there?
But where's the silver? Maybe grandma's hutch. She gonna pillage her plates and fork collection.
Try bringing the receipts. Let's bring some receipts. So here's the other article.
And here's the other article. 1 week later, we pick up the silver squeeze is coming. Stocks could be depleted in 2 years. So we have TD Bank, TD Securities, with Daniel Galley. He's a senior commodity analyst at TD, and he says silver strength comes from its demand and lack of supply. And he says the demand represents more than 50% of the physical market. But wait a minute. Just last week, Bloomberg told me there is too much silver. But now we have TD Securities telling us it's not enough. It's too much demand. And not factoring in the military demand and aerospace demand. We're just talking about solar. The silver market is set up, he says, to make the most exciting trade strategy in the energy transition theme across the entire commodities complex today. Again, Gali is talking about silver, ladies and gentlemen. This is a major transition and a major transfer of wealth. And he noted that this growth in demand and significant underinvestment in mine supply, slowness in mines, has created a universally recognized structural deficit.
Right.
What was that? Universal structural, not just in U.S. or in China. This is the entire globe clamoring for the most undervalued, overlooked metal, not any longer. Silver is that coiled spring, the Achilles heel for the financial system, the corrupt financial system. And, this was just one of those articles where it just makes you scratch your head, Jeremy.
You could coin that one. Right. So the Deutsche Bank guy just basically says, look, there's a lot of above ground silver. We've put it into computers, cars, cell phones, plasma screen TVs, athletic wear, woven into athletic wear, solar power things. Maybe you can take it out of, anything like bandages or something, where maybe it's the cutlery. Maybe
it's the glasses for the eclipse coming up.
Yeah, maybe it's part of maybe we can just destroy some old film or something and get the silver out of that. I don't know. But it's all available, Jerry, at the right price.
Yes.
It's all available. Now, he doesn't go into the mine side, which the TD gentleman certainly does. He said, listen, there's a lack of investment. There's only a certain amount of product coming out of the ground. And let me just explain that since we're talking about silver. There's going to be a lot of people where seeing is believing. They want to buy silver when it's $50 an ounce. Because at $50 an ounce, they're going to look around the world and say, what can I buy for $50? Silver's at $50 an ounce, which it hasn't been at since 1980. Gold's going to be trading at $4,000 an ounce or something like that. They're going to say, I'll go with the cheaper one. Not the one that's more valuable, the cheaper one. It is more valuable, but they're saying the right thing. They're doing the right thing for kind of the inaccurate reasons. But for most people, seeing is believing. Now, how much silver is available? Okay, Jerry, and everybody listening, we had Silver Squeeze 2.0. We had the convoy when they cut off bank accounts. We had COVID. In those three situations, which happened all within the last 5 years, here's what happens. Listen very closely. The retail market, where you want to go buy your 10-ounce silver bars, gets zapped. Within 2 weeks, there is no 10-ounce bars available. Now, you can order them. They won't be delivered for a month. And then that runs out. And within 3 weeks, the wholesaler's waiting 3 months to deliver your goods. Now, why is that? Because the mint, like Royal Canadian Mint, only produces so much every month. And if you run out of your store of product, your stockpile, which is very thin, when you run out of that, the wholesaler's now waiting for that monster box of silver maples. Now, they're waiting for it. The other 4 major wholesalers are waiting for it. And it's the guy on the street that's competing for that product that won't be available for 3 months. Now, can you order past 3 months? No. Mm-hmm. Okay. You shouldn't even be ordering something waiting a month.
No.
Okay.
Not in this market where with trust is out the door, people are not waiting.
But we've seen people wait 3 months, right? Not our business, but other businesses saying it'll be 3 months, and you're on a waiting list. Now, imagine when Exeter's pyramid is collapsing and the bubble is bursting and everybody realizes that they want the product. Oh, and by the way, seeing is believing. A whole bunch of new people at $50 have decided they want in. We're not even going to be able to sell the product potentially, Jerry. Mm-hmm. The market's going to be moving so quickly. How are we going to take in the funds? If it takes us, a day to get in funds and silver goes up $5, we're losing money.
We've been through this. We fought through this, and it just, thankfully through clear communication and friendly clientele, we were able to get through this silver squeeze. It was very stressful to manage and set expectations without causing further stress and worry. People are stressed out. They want to get their money. This was the convoy time. This was when banks were getting frozen. We understand why people want to get their money out of the banking system. And I'm not going to argue with them. I understand where they're coming from.
But here's the difference is back then, most of the world could say, well, that was just a few people who were fanatics or something like that, right? But when it hits your own pocketbook, when you start being concerned about, World War III or banks are shutting down or you just start seeing crazy stuff start happening and it starts to affect you in a different way. Now we're talking about everybody getting involved. Now,
yep.
if there's 2 billion ounces above ground silver and we're trading at, we're under it, but let's say $30 an ounce, $60 billion. I mean, we mentioned Ukraine earlier, but I think more money's gone there. Mm-hmm. So I think Elon Musk bought Twitter for a little less than that. So it's not a big market. It doesn't take a lot to get out to zap that market. And if you're going to own it, if you're going to be invested, you might as well own it. Now, it's not complicated to own it either. This is the difference. In crypto world, they were all excited about Bitcoin ETFs because people who couldn't understand it, right? They browbeat people they're not smart enough to understand it, so they buy the ETF. Well, gold's not. How is gold complicated to own? How is silver complicated to own? It's a retail product.
It's not.
Is it difficult to own a T-shirt? Is it difficult to buy a chair? Like, what's the difference? Is it difficult to buy a mug? That's gold. It's a fabricated retail product.
That's right.
It's not complicated, but yet people go into these ETFs all the time, and that leads me to another topic, which maybe we can talk about in the next segment, which is since 1971, they have convinced everybody not to own it. But if you do want to own it, if you're absolutely convinced, here's an investment we'd like you to take part in. Now, as people start to wake up, they've been told for so many years, it's a pet rock. It doesn't pay a dividend. It's not money. It's something from the past. You name it's volatile. I mean, it's had 2 down years in the last 20 years at this point. 2 down years in Canadian dollars. That's volatile?
No, we've
Right?
been over this and we've debated this time and time again. And
But then they'll wake up and they'll say, okay, maybe I should own it, but you don't want to put it in a vault. They could rehypothecate that. You could open that vault and they'll show you the same product to 20 other people. Like, or the government might confiscate it. All these different excuses why you shouldn't own something real. All these excuses why you shouldn't own something real. Let's talk about that in the next segment. Why are you being convinced not to own something real? The number, 1-877-8-SILVER, the website, guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number, 1-877-8-SILVER, the website, guildhallwealth.com. Gold, all-time highs. Great. Get used to it. It's going to be at all-time highs when it hits 2350, 2375, 2400, 5000, 6000. But there's a limit to where it's going to go as well. And this is the key. This is not when you hear a representative from Guildhall talking about precious metals, you will not hear that gold is going to go up in perpetuity. We know that at a certain point, gold has a limit of what its purchasing power can be. And that when it's at its max or close to it, we talk to our clients all the time about exit strategy, what to look for. There's 5, 6 criteria to look for. And guess what? None of them have anything to do with price. We teach people how to understand the value of it so that you know when you can start looking for an exit strategy, both in gold and silver. And there is an exit strategy. We're not here telling you it's going to go up in perpetuity. No, it's going to go up to a place where, hey, if it's at a 1-to-1 ratio on the Dow, you got peak gold.
Speaking volumes to me.
You got peak gold. You should go out there. You're going to find that the ratio in your portfolio has gone from 10, 15% up to 30, 40%. Your stocks have probably come down from 70 down to 60 or 50. You're still ahead on your overall portfolio because gold and silver have kept you in it.
Yep.
But now there's a whole bunch of things that look really cheap all of a sudden against gold. Well, why wouldn't you take advantage of that? Are we going to be standing in the way? No.
Absolutely
We're not going to be sitting there saying, no, it's going to go higher, go higher. No. We know that people are going to sell off 2/3, 3/4 of their position at some point. They'll have their initial capital, but then that 3 times, 4 times of what they've gained is going to go out into the world and buy things and invest in things.
That's right.
And, be there for the future of yourself, of your family, and all the things that you can do with that and grow it.
That's right.
This is a once in a lifetime generational thing of wealth transfer that you can take advantage of, but still know when and how to get out.
I think that offers tremendous peace of mind when people know that the solution right now in this day and age is precious metals to safeguard their wealth. There's a plethora of issues. I just reminded of Egon van Greyers from Matterhorn Asset in Switzerland. In 2002, this was in a world of government deficit, runaway bank credit crisis. People were worried. So at that point in 2002, recommended up to 50% of their overall value, of their overall portfolio in physical precious metals mixed with silver and gold. Fast forward to today, it's the same issues, just a lot bigger. The debts are much, much bigger. The derivatives market is screaming worry. It's 60 to 100%. So this is the question is, can there be enough gold too? I mean, it's one thing to have a exit strategy of if it's 80-to-1 silver to gold ratio, it's a screaming buy for silver. Once that ratio goes below 50, then let's have a conversation to talk about getting into maybe gold that's now undervalued. But there's an exit strategy, but there's really no limit. I had a client this week.
What does that mean?
Of acquiring gold and precious metals.
Oh, I see.
If Egon, and he's a professional, he recommends up to 100%. Why? First, it's risk mitigation. You want to get away from the risk, but you're also protecting outside of the banking system. So you're undigitizing, but your position for tremendous top set potential. Because Ghani from TD, going back to TD Securities, he cited underinvestment. And in looking at the whole overall extras pyramid, if just 1% of all the money in the world and including assets and derivatives and treasury bills, corporate muni bonds, non-monetary commodities, all of these things jumped into precious metals, you eliminate the above ground ounces. And this is going to cause a move higher in precious metals. So when I had a client this week came to me and said, my advisor, have you already bought gold? And she said to me, Jerry, I already have enough gold in my portfolio. And I just recalled, who's buying metals these days? If you're looking at countries and you're looking at countries' central banks, they have an insatiable appetite right now for precious metals. There is no peak. It's 9 consecutive months of central bank buying of gold. They can't have enough gold. Neither can we.
Now they buy it physical though.
They buy, and that's a big difference, Jeremy.
So why is it, getting back to the question from the last segment, why is it that when it comes to owning physical gold, people have an immediate aversion or many questions? I had a client today. She said, I have a group, and they said, well, if you're going to own gold, don't put it in a vault because they could be rehypothecating it. And you're just sitting there saying, Brinks that we use is IROC approved, Investment Industry Regulatory Organization of Canada. So if they were to do something like that, they would lose that accreditation and all of the benefits that goes with that, like holding it for registered accounts, holding it on behalf of banks, holding it for sovereign investors, wealth funds, etc., private wealth. Why would they do that? Now, imagine if Guildhall were to try to do that. We'd have to take the product out of one client's account, put it into Guildhall's, then deposit it into a different account, and then withdraw it from that account, and then put it into another account. You don't think Brinks would kick us out like that?
Immediately.
They don't need that they don't need that. Their insurance policy would say, we're going to take away your insurance policy.
Yeah.
Right? So I don't know. Now, I'll tell you who can get away with that. JP Morgan, because they did it in the aluminum market. Now, I don't know what kind of inside job that was or where they were storing the aluminum, but I don't think aluminum even has serial numbers. So I think it's like someone is, hey, listen, I'll pay you to let this go. Yeah, take delivery. Then they take it delivery and put it into another storage. I don't know. But sure, they could do it with aluminum, and only the banks can get away with that. I don't mean all the banks, but some banks. Some particular banks that have been fined many, many millions of dollars over the years.
Over and over again.
Because they're happy to pay those because they make a lot more money. But when it comes to physical, it's I think the wake up moment in that is that when you own the physical asset yourself, there is nobody else to blame if it goes down because you own it. You can't blame an advisor. You can't blame freak things happening in the market. Oh, this was a once in a 100-year cycle pull down in the market. Like, who could have predicted? You can't, because gold can't go to zero. So you don't have that as an issue. And there's a mining cost, so it can't really go below the mining cost. So it just becomes a sense of responsibility of, oh, I actually own something. So the mind goes to these places of, well, what happens if I own it directly? Well, can it be confiscated? They're like, listen, since 1971, the government's done, the banks have done everything they can to make you not want it.
And it's worked.
And if you do insist on it, they want you to do it in an investment that stays within the financial system.
Because it's easier and cheaper.
Because they don't want you to take the funds out where there is no counterparty risk. And then there's, you've got your income tax, you've got your HST, you've got your inflation. They are taking so much wealth from you. Let's talk about inflation and the contradictions in the numbers on inflation and how to protect against that in the next segment. The number, 18778-SILVER. The website, guildhallwealth.com. It's The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number, 18778-SILVER. The website, guildhallwealth.com. So you've been hearing us rant. We had a lot of coffee today. Maybe it was just me. But if you want to hold physical precious metals, you can do that in a registered account, like an RSP, a TFSA, a LIRA, a LIF, a RIF, a first-time home buyer's account. And it's fully allocated metal, which means the serial numbers are recorded for you. Your sub-account is segregated from all other holdings at the vault. You can go to the vault and personally audit your holdings. We've had a few clients do that this week. It's always a unique experience that we recommend. Clients always come back more confident than ever about the market because they go there, they experience it, they see the serial numbers, they see their product. It just gives you that complete peace of mind that here it is. I'm holding a physical asset in a vault outside the banking system within my registered account. That is a great vehicle for storing wealth. And by the way, you've deferred your income. You got the rebate on it, maybe 30% rebate. So you just got a cheaper gold price or silver price. And now what do you have to do? You just have to beat inflation and the taxation at the end, right? Because you're going to pay income tax at the end.
Right.
Governments don't partake in your losses. They partake in your winnings. But if you just give the money to the government, you're an instant loser. You gave yourself you gave the money. You didn't give yourself a chance to make anything with the money that you could have gotten rebated to you.
Down without a fight.
Down without a fight. You just go, I fold.
Amazing hand.
Right?
I fold.
But yet gold and silver's up like 350% over the last 20 years. Gold's up over 460%, I think, in the last 20 years. You've beat inflation. You've beat the taxation. There's no reason to actually think about, now I'm not suggesting it, I'm not an advisor, but when you look at the past performance, you can say, did I need anything else? No. So I look at Egon von Greyerz, to what you were saying in the last segment, Jerry. He was bang on. If you had just put your money into gold over the last 20 years and silver into the last 20 years, you would have looked back and said, I wouldn't have needed anything else. And the storage fee, what's 1% a year? That's
Big
nothing.
Deal.
It's nothing.
Big deal. Yeah, his reviews are fantastic. You got to go through his reviews. Clients are very happy. The ones who have held over the last 10 years, very happy. His reputation out there over there in Switzerland is stellar. But before we get into the next headline, Jeremy, the number 18778 silver, the website guildhallwealth.com. Give us a call to own physical, because if you can't hold it, you do not own it. Now, Jeremy, you brought up inflation. This was always an issue with me. This was partly the reason why why I do what I do. It's this inflation number. Thankfully, the inflation number, what the government tells us, it's going down, Jeremy. They're getting a hold of this inflation. Inflation's down to 2%. Things are getting a lot easier.
Thank goodness.
It's feeling better, right?
I guess so.
Put on that television.
They told me.
I watched the headline today. It says 2.9%. And then I went shopping and damn, the prices are still high. It's not going down for me. And it
reminds me of when Doug Ford promised that they would stop the lockdowns, and you go, oh, thank goodness. And then he says, no, we changed our mind.
Yeah, we just changed our mind. And this is one of my arguments, is I believe, and we have the data, that inflation number is a lot higher than what it is. We've talked about this before. We do share the information from Shadow Stats from John Williams. And the read is pretty bland, but I think the data is very powerful and convincing, especially when the Kobasi letter starts talking about it. So everyone's following the Kobasi letter out of the States. They tweet a lot on X. Their stuff is very relevant. And when they started to talk about the CPI, obviously Jerry is here to listen. And they started writing very, very easily. Why does everything feel so unaffordable? According to the pre-1983 inflation calculation method, inflation is nearly triple what current CPI data says. If you use pre-1983 CPI inflation numbers, it peaked at 18% in November of 2022. So we peaked at 18%. I think that's when we're around 5, the official, and currently stands at a whopping 8%. Under this method, housing inflation more than doubled since 2020 alone. Even in August, last year's summer, the inflation number method would have put inflation at 12%. Perhaps there is such a large gap between headlines and reality. What gives? Why is there such a difference and a disparity between the headlines of what we read and in reality? Are our inflation formulas off? That's a really good question. Are our inflation numbers off, Jeremy? What are your thoughts on that?
Oh, completely. I mean, listen, you're talking about these entities that said inflation was transitory. So I'm not sure if we're going to sit back and just believe what they have to say in that regard.
And just thinking about, where people are putting their money. And when you have people asking, I want to get into gold. I want to get into silver, asking financial planners, but the planner wants to keep that money in the bank. Not to mention we have a fractional reserve system that too much money flowing out can cause a bank holiday. But besides that, the whole point is trying to keep the money in the bank. And people don't want, the average person who deals with Guildhall wants to get their money safely undigitized out of the bank. But if the bank is giving you 5% GIC, that may be a carrot to stay in the bank. But when you know that inflation is perhaps 12%, okay, I'm down 12% at the end of the year, but I'm up 5% with your GIC. Well, guess what? At the end of the year, you're down 7%. The math doesn't add up. You lost 1 year of your life from potentially getting into something like precious metals that is ready because the rate cuts are coming, despite jawboning, despite revisions in job figures. The rate cuts are coming, and the history of data shows that every time since 2001, when the U.S. cuts interest rates, silver's off to the races. Average gain of 400%. So you don't want to chase the yield of 5%. You want to get the 4 times gain in metals, and silver is that coil spring to do that for you. Don't believe the data. We know it's not 2.9%. Understand that the real way to beat this inflation fight is not chasing that measly yield. It's by owning real things. Jeremy.
Think for yourself. Do your own research. Don't believe us. Do your own research, although we're happy to educate you on the market and speak about these markets. You know we love to talk about them. Look, at the end of the day, we've seen some good movement in the market. We hope that the takeaway from today is that it's not always about price, it's about value. Price is what you pay, value is what you get. If you look at the numbers, you still see that gold and silver are incredibly undervalued against the debt in the world, against the money creation in the world, against stock market, against real estate. There's a lot of room to grow. So if you haven't started a portfolio, consider giving Guildhall a call. We're happy to show you how to do it. We'll walk you through it step by step. But having some physical precious metals is significant in today's market. You have to be very careful with how you use your money and where you spend it and making sure that you can protect it. Give us a call, the number 1-877-8-SILVER, the website guildhallwealth.com. Jerry, thank you so much. That was great. Can't wait to speak to you next week, and can't wait to speak to all of our listeners next week here on The Real Money Show on 640 Toronto.